Hey, what's up y'all? Welcome back to my channel. In this video, I'll be talking about ticker symbol AMC. The stock is closed at $8.01. Very important price point and the level at which the AMC stock, ticker symbol AMC, was closed during the last trading session. In this particular video, I'll be talking about three things. The first one is we'll review the AMC stock price and we'll take a look at why this price point is pretty important. The second thing is we'll review the call options that expires and what this $8 value can bring in terms of the call options that expires on February 26th, and that can cause the stock to spike up to a pretty huge level. Now, we don't know what level, but we'll talk about that in terms of the price prediction and some of the discussion. And the third thing is we'll talk about the gamma squeeze or short squeeze that can bring in the stock price to shoot up on Monday pretty quickly. So watch the full video. I'll walk you through step by step why this call option is in the money. We'll walk you through also how that can happen on Monday. Now, consider subscribing to my channel because I do a lot of research and analysis and share it with you guys. So if you want to watch more content in future, consider subscribing to my channel. Also, click on the like button because I do a lot of research. I put in a lot of efforts to share this information with you. So if you can click the like, it can I can make sure that this video can reach to more and more people. Now, without further delay, let's talk about AMC. Now, the AMC, the stock closed at $8.01, and we needed to close it above $8 level, $8 strike price to make it pretty interesting. That can cause gamma squeeze and potential short squeeze on this stock on Monday. What it can do, it can basically create a stock spike up in the price. Now, it did not go above $9 or $10 level. Now, let's take a look. It did try going above $9 level right here, but it got back after $8.99. It went all the way down to $7.79 level, and then since then it tried going back up. It did all the way up to $8.62 around 3 o'clock, right 1 hour before the market closed, but then it dropped back below $8 level, but somehow it got back up to $8.01. Now, this is pretty important, and why I'll show you. Let's pull up the call options right here, and you want to take a look at this $8 price point, and you want to also take a look at the contracts, the 50,000 or maybe close to 51,000 contracts right here, and all the contracts below that price point. Now, that all those options are now technically in the money, and I'll be able to talk that through and help you understand how this can technically work. Now, once again, I wanted to say the whole market was down. So that was not only AMC, but it was pretty interesting to see how the stock dropped pretty quickly right here and how it got back up right here. About $8 price point. Right now, after hours, the stock is $8.20, but it doesn't really mean anything at this point. We will be able to see how the stock can spike up on Monday morning. Now, we can pull up the call options as I mentioned just right here, but now what this means is since the stock is closed above $8 level, the people who had the $8 or below in terms of the strike price point, so $8 and below, so right here 50,897 this contracts, and now each contract is 100 shares, so or 100 stock units. So that's what you want to consider. So 50,000, 35,000, 85,000. So if you think about this, it's more than 100,000 contract. Now, what that means is 100,000 times 100. So pretty much we are looking at about 10 million shares of AMC, ticker symbol AMC, that is impacted by this price point. Now, if it was closed above $9 level, there would be more 32,521 contracts, which means times 10, so 3.25 million more shares will be impacted, but that's okay. Now, this is also about $8 price point and below, it's still a significant number of shares that are impacted, 10 million. That can potentially cause a gamma squeeze on Monday. Now, what that means is the stock can spike up to 11, 12, 13, $14. And if the cycle starts with the buy sell where there are not enough shares that the people want to buy, that can cause the stock price to shoot up. Now, looking at the gamma squeeze can lead into potentially the short squeeze. Now we have, let's say, this call options right here. So at $8, 50,000, $7, 35,000, $6.5, 23,000, and let's say $5.5, $5.50, 10,000, and this is also significant. So let's say $5, 4,900. So these all options all the contracts are potentially in the money, which means who has this option at this strike rate, they are in the money, they are making money at the moment. And as I mentioned, 100,000 times 100, so 10 million stocks can be bought on Monday morning. On the market opening, that is going to shoot the stock price up, and that can cause the gamma squeeze. Now, if things work out the way it worked last time, let's say right here, let's take a look. Let's say 1 month chart, and you see the way the stock spiked up in the past, all the way up to $20. It can possibly happen on Monday morning as well. It can ultimately turn into a short squeeze. Now, gamma squeeze technically can go higher and higher and higher for two reasons. One thing is gamma squeeze because of the contract that are expiring I mentioned, and the second thing is the hype and a lot of talk about AMC, and people are expecting that this stock can go up to $20, $30, $40 level. So that adds up as well. Now, so let's take a look. If it can go to $50 to $20 level, I think it is expected. If it goes above $30 level, that is super hype. So do your own due diligence before you get into AMC. Now, theoretically, if it finish the way it is finished, all these options are in the money, as I mentioned. If you take a look at the short interest or short volume ratio is 26%, which is also pretty high. Looking at the short sale available, as you can see, this is the latest data on 27th February, which is today. It's 1.3 million that are short sales that are available. And looking at the short borrow fee rate in percentage is 4.29, which is also pretty healthy. Now, this all suggests that the stock can go up because people who have contract $8 and below, they can potentially buy because now they are in the money, as I just mentioned. Looking at the volume that we saw and observed on Friday, the volume is not huge on Friday. And once again, the whole market was in down. It was all red. The volume was below the average volume. So volume was 132 million. And it is consistent across the way it was trading. It's all over the place, quite honestly, but the stock went from $10 or $11 to $9, and pretty much it closed at $8.01 because of the sell-off that we saw in the market due to the yield and the bond issue. Now, looking at this candle chart, once again, RSI does not really matter, but RSI is still 45, more towards the oversold side. But if you take a look at the candle, the way the candle couldn't hold the stock price right here, $8.61, and then we saw the sell-off. The stock had a little bit of support, but then once again that the sell-off happened and it could not sustain around $8.20, dropped below $8, but it got quickly back up. If you take a look in last few minutes, really last few minutes. So because of that, $8.01, all these contracts were now in the money, as I just mentioned. If it was let's say $7.99, this 50,000 or 51,000 contracts, which means 50,000 times 100, 5 million shares wouldn't be in the money at the moment. But now that it closed about $8 price point, all people who bought or who has the contract that expired on February 26th, that was going to expire, you see right here, 26th of February 2021, they are now in the money, and I'll walk you through why they're in the money. But let's take a look once again, going back here, and stock bumped up right back about $8 level. Now let's take a look at the article, and I want to make sure that I explain step by step. When is a call option in the money? A call option So think about AMC while we talk about this and we discuss this right here. A call option is in the money when underlying securities current market price is higher than the call option's market price. So look at this once again. $8 is the price of the call option, and right now AMC stock price is $8.01 by just 1 cent, and that's why I think it's pretty interesting, or maybe manipulation in the price, but whatever it is, the call option is in the money because the call option buyer has the right to buy the stock below its current price trading value. When an option gives buyer the right to buy underlying security below the current market price. Now think about it. Let's say if someone tells you that you can buy a stock is trading at $8.50, but we'll let you buy the stock at $8. You're definitely going to buy because you're going to make 50 cents right there and then. So you buy and sell, boom, 50 cents, you're in the money at the moment, as I just mentioned. When is a call option in the money? Now, right to buy underlying security below the current market price, and then that right has intrinsic value. Again, it's an intrinsic value because you're buying lower than the current market price. The intrinsic value of a call option equals to the difference between the underlying current security's current market price and the strike price. Now, let's say you are having this option. Once again, going back to this right here, this chart, let's say you are this 1,000 contracts, right? So 1,000 times 100, that is once again 1 million, or sorry, 1 million. 100,000. So at this point, so you're at $4. You have a right to buy this at $4. Now you can sell it at $8.50. You're doubling up your money right just there and then, right? So looking at this, a call option gives buyer and holder the right, but not the obligation to buy the underlying security at a determined strike price on or before the expiration date. In the money describes the moneyness of the option. Moneyness explains the relationship between the financial derivatives, strike price, and the underlying security price. A call option is in the money when the underlying security's current market price is higher than the call option strike price, which happens $8 and below because the stock is at $8.01. Being in the money gives the call option intrinsic value, as we just explained the difference between whatever the current price versus the option's contract price. Once the call option goes into the money, it is possible to exercise the option to buy the security for less than the current market price. Once again, if you have the option or the contract at $4, you're doubling up the money just by purchasing the option, the stocks, pretty much. And one contract is equal to 100 shares. Now, as a practical matter, the options are rarely exercised before the expiration date, which is not super relevant. Now, this is a very good example that we want to look into. Let's say with a stock price with $35, expiration date of 1 month today, if ABC stock price is above $35, call option is in the money. Suppose it is trading at $38. Very similar situation. $3 is the difference. It is the intrinsic value in this use case. Now, looking at the trader can exercise the call options of 100 shares. Once again, one contract is 100 shares of ABC for 35 and sell the share at 38. So they'll have a profit of $300 just by purchasing the option and selling the actual stocks. So that can happen. Now, if people keep buying and buying and buying, because we're looking at 10 million shares all at the same time, which means it's going to be people are looking to buy and buy and buy where the share might not be available. So whoever has to sell, the stock price can go higher and higher and higher, and that's potentially cause the gamma squeeze. Now, gamma squeeze can turn into the short squeeze that can bring in the stock price once again at a higher level. Now, if the cycle keeps going on and on and on for a few hours, the stock price can drastically go up, and it could be maybe $20, $25, $30, $35. We don't really know. We can't really expect, but you want to take a look at the volume, the way the volume works during the trading session. So there's all these bars. Look at this, like the volume was 10.05 million. And this is precisely what can happen. But if people don't want to sell that at that particular price point, the price goes higher and higher and higher. That causes the situation that we saw last time in GME or AMC or any other stock that you have seen in the past. But this is pretty interesting. So I wanted to share how the gamma squeeze work, how gamma squeeze can turn into short squeeze, and what is the call option in the money. I hope this explains Click on the like button because I did a lot of research and I wanted to share this information with you all. Click on the subscribe button as well to subscribe to my channel and watch more videos in the future. Turn on the notification bell and share this video with your friends and family so they can also get an advantage of the research and analysis that I have done. I'll see you in the next video.